Hello and welcome to Pro Trader Strategies Market Commentary for Friday, July the 14th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation for a particular stock or strategy is because I don't know your risk parameters, I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Please remember that past performance of any trading system or methodology is not necessarily indicative of future results. Anyway, having all of that stuff out of the way, let's get it on with the economic data. It's a French holiday across the pond. Here in the United States, we got CPI numbers. CPI came in at unchanged versus expected increase of 0.1%. Core CPI came in slightly lower than expected at 0.1% versus the expected 0.2%. Now remember, core CPI has to do with food and energy taking out of that number. With those food and energy, it makes it more of a baseline, if you will, because food and energy can be a little bit more volatile, so they strip those out sometimes. And with retail sales, we also came in at negative 0.2%, was expected to be a positive 0.2%, so a bit of a wet blanket there. And then core retail sales excludes automobiles. Retail sales came in at negative 0.2%, was expected to be a positive 0.1%. So not really anything great there. Although we did see industrial production uptick to 0.4%, expected to be 0.3%, and a revision to last month's number up to from unchanged to up 0.1%. Capacity utilization came in at 76%, and they revised last month's number down slightly. Today we have Kaplan speaking, who is an FOMC member. He's actually speaking right now, so could move the markets, but not necessarily so. Anyway, on to crude oil, up about 46 cents. I haven't done anything in crude oil. I've looked at a couple of things like XOP, USO. Just not, the charts on those just haven't broken above this area either, so I'm going to kind of hold off on it, wait and see if we get through this 50% fib level. If we do, then I'm going to be looking to add something, and hopefully we could break out of this little downtrend, if you will. On to gold futures. They're up on the day as well by about $10, back above that 38 fib level, looking like it wants to go back to test this 50 fib, which is where the point of control lines up as well. So nice little area for the market to really want to navigate to. Onto the bonds. They're up slightly on the day, off of some of the highs that we saw earlier today. They were really rocketing higher. And then some of that economic data points came out and the market kind of calmed down. Also, with E-mini S&Ps moving higher, Dow Jones on its new historical high right now. Those bonds are really going to start coming off. The Dow Jones, like I said, making a new historical high, up just over 60 points. Then with the NASDAQ up about 29 points, 28 points, very near their high. They've got some catching up to do to catch up with the equities. Remember, the E-minis and the Dow. If you remember, NASDAQ was the leader of the charge to historical highs, and the E-mini S&Ps and the Dow were a little bit more of a lagger. Now we're seeing the E-mini S&Ps and the Dow really make those moves higher to historical highs. So I think the NASDAQ has a little catching up to do, and I think tech sector might start doing well in the next few days. Anyway, especially if we start seeing newer highs here. But E-mini S&P is up almost 9 points right now. This is the breakdown of the E-mini S&Ps. You can see basically overnight started rallying and then came into the overall day session with the economic data points that we got, albeit those weren't the best numbers we've seen in a while. The overall equities are really pushing higher right now. On to a few trades that I've done with this Adobe trade. If you guys remember, I had this trade on and forgot to tell you yesterday I took it off. So you can cover it for probably almost a dime better than what I did. So I had on the August 130 puts that I originally sold for 94 cents, bought them back for 46 cents. I think, like I said, they're trading right around somewhere between 35 and 40 cents right now. So you can probably get that off a little bit better, especially with that move higher. Anyway, on to XRT. These are a couple of trades that I've added, and with XRT I went in, decided, we've got that tweezer bottom, still has pretty high implied volatility for an ETF anyway, and XRT I went in and sold the August 36 puts. Oh, sorry, 38 puts in there for 30 cents. Then in XLK, similar situation, XLK being the technology sector. Like I mentioned, I think that NASDAQ's lagging a little bit. This is going to be affected by the NASDAQ push up because it's a tech ETF, and NASDAQ is very heavily weighted into tech. Plus we got back into this upward channel. So once you break down below that, we've gotten back in there. I think that this upward channel is going to continue to go, especially if the NASDAQ starts really pushing higher. So with this higher implied volatility, I was able to get into the August and sold the 55 puts for 40 cents in there. And looking for, some theta decay and stuff like that, because we're right there in that zone for the massive theta decay. About 50% of theta starts coming out of any option inside of 35 days to somewhere around 10 days. So looking to kind of get right into that whole wheelhouse. Costco doesn't have earnings for quite a while, so it has high implied volatility. It's still got that high implied volatility wrapped around the event for Amazon buying out Whole Foods. So as you can see, Costco has really come off of its highs with that news. I think it's overdone. I've been trying, I've been playing it, so I'm back in Costco again, and went into the August, sold the 145 puts for 97 cents. I also went into my IRA and added this short position to my IRA as well, but define that risk, although you can do nakeds in an IRA on naked puts. You can't do naked calls, but you can do naked puts. I just did it to be a little less margin intensive in my IRA. So I went in there and did the August 145, 125 put spread in there and collected 92 cents. So less than a dime for those 125 puts to define the risk, but it lowered my margin by a lot, which helps out in my IRA. So I limited that there. That's all I've done for you guys today. Today's webinar is going to be on the short put spread. So in a sense, kind of like along the lines of what I did in the IRA, I'm going to be talking about how to implement these to make it more of a synthetic type of naked short in an IRA, and how to set it up properly in a regular account, and then teaching you guys how to kind of make those wings a little, or the defined risk aspect of it a little bit wider to increase your overall risk parameters. So, and hopefully, your risk tolerance, I should say. So go to ProTraderStrategies.com, sign up for that webinar. If you want to play by the probabilities, then go check this webinar out, because it is going to be all about probabilities of success and how to increase those probabilities. All right. So if you go to ProTraderStrategies.com, you can sign up for that. And if you can't take that, take it easy.